Interesting insights. And back to you, Madam Wanga. So for the investors out there, they are asking a simple question. Are we likely to see kind of a fast-paced rebound of the markets now that the year has begun on a stronger note compared to how we closed last year? What do you see when you look at the numbers?
So we'll see a gradual recovery. So in the first quarter, banks will be, actually most companies will be releasing their 2020 numbers, which will not be that good, but a number of that has already been factored into the expectations. So we'll see prices slowly continue to increase, and then towards the second quarter, now as foreigners continue to invest in the equity market, we'll see the prices rally. So it'll be a gradual increase in prices.
All right. And Ms. KIGEN, looking at what Madam Wanga has just brought up, of course, what will be some of the key drivers, especially now that we're looking at our debt situation as a country? We are literally trying to get more debt relief to be able to take in a bit more of reprieve. Economically speaking, what sectors are we likely to see that might be the major economic levers that will usher us into a better place come 2021? Exactly the same analogy, that swimmer who was swimming, a small tide came in. What will that be that will catapult us to getting to the finish line?
First, I look at the tech companies in terms of right now with the virtual, even education sector, embracing the virtual learning and all that. I think the tech companies will be a leverage to us. Looking at the agricultural sector, the weathers have been favorable. I might say God has really looked. He doesn't hit both sides at the same time. At least there's room for like a breather. So agricultural sector will hold us up, and the banking sector, I think with the embracing of technologies, I think it's a rebound for them as well. Yeah.
And GICHUHI, I saw you nodding profusely.
No, I just thought COVID seems to have taken care of the locusts. Yeah, I know. They're still around somewhere, but yeah, but I think they're not coming where there's too much COVID. Anyway, that said, I do agree. But I think what investors need to be very keen on right now is the volatility. Volatility is your friend. And what you need to do now is, I know the most active counters will have the big, the big three, Safaricom, KCB, Equity. Then we have the other banks there. And of course, we have the EABLs and the lot. But we are going to see quite a bit of volatility because recovery does not happen in a straight line. So that's the volatility you need to ride on. Buy high, buy low, sell high. Buy low, sell high. So we have seen, even if you look at last year, we saw the likes of KCB go to what, 34, go back to 40, and then come back again to 35, 34, 35, and then go back to 38, 39. Now that means that anybody who was riding that wave made good money in 2019, in 2020. And so 2021, because the recovery is going to happen, so, and as the foreigners come back, it doesn't mean they come and it goes in a straight line. It's not going to be sudden. There's going to be a lot of volatility, and that is the investor's best friend. I think before COVID, we had reached a point where some of the stocks, and I think Wanga will agree, were at very high valuations. And so we were actually looking at stagnations because the volatility sort of goes. They're not going down, they're not going up because they're sort of at a value where people, the buyers are not willing, the sellers are feeling it could go higher, etc. But right now, because there's that consistent expectation, then investors can make good money this year.
And Madam KIGEN, you brought up a very important issue that ICT will play a critical role in 2021, especially now that we are seeing quite a lot of transitioning where there's e-learning happening in schools, universities. Corporates have also embraced technology in a big way. And in line with taxation, we know the taxman, KRA, also introduced the digital service tax. And this is basically to target the netizens, the people making money like GICHUHI, who is selling avocados and marketing them online. Of course, on a light note, but really, what is the scope for the taxman in terms of actualizing this, and how much can they really net from this particular technology front?
As they say, a journey of 1,000 miles starts with a step. So I think, yes, they may not get much in the first place, but I think gradually, even I look at these other taxes, they've gradually come into play that more people are compliant in terms of paying their taxes and even being accountable in that arena. So I think with this introduction, I think with the persistence in terms of reminding and educating why it's important, because at the end of it all, when we all learn the importance of paying our taxes and proper accountability, no one will have a problem paying their taxes.
Right. And still with you, Madam KIGEN, when we move this conversation forward, as we look to bolster tax collection, some say we haven't exhausted other avenues. We have people who are sitting pretty, and yet they are very potential targets for tax. And this presumptively the rich, who ideally conversation on the ground is they need to be taxed more. I don't know, what's your feeling about this?
Is it being taxed more on the rich? Because I feel the current tax brackets, they are gradual. They are not hitting the person earning less than 24,000 with a huge tax compared to the other. So they are gradual. So I can say there's quite a spread that covers almost everyone when it comes to, let's say, payee. So when you look at the other taxes in terms of businesses and all that, I think it requires better planning, which I want to believe the government is putting measures in place, because you can't just, I look at the introduction with the ETR, at least it came in, made the small businesses be accountable. Yeah. So I think measures have to be put in place, first of all, to ensure the tax, as much as it's being introduced, it is serviced.
Right. GICHUHI, you'd like to weigh in on the tax?
Taxes have a tendency to make us less competitive, especially in a country where we rely on SMEs and small, individual-owned businesses. And I think building the base, you need to make somebody taxable so that you can tax them. Mm-hmm. So I think at the bottom, increasing that bracket to people who are earning less is going against what can really help us to reach that point where, because I want somebody to go from earning 24,000 to earning maybe 100,000 and then tax them. Rather, because then I encourage that growth. The more licenses we have, the more businesses are unable to, they're paying more, which means their products will be more expensive, and that makes them less competitive. Mm-hmm. And if we are going to grow our export base, if we want production to happen, then I think we need to be very, very careful and clear about how we are going to go about this taxation. Because I remember there's somebody who said, look, we're building the SGR, we are a net importer. What we should really be fighting about is not how expensive the SGR was, is what are we going to take back on that train? Because if the train is bringing goods from Mombasa, what are we taking back? Mm-hmm. And so it needs a very targeted process to make sure that there's enough production that is now filling that train back to export, because that's the only way we're going to be able to generate enough to pay our debt. Taxing, if it doesn't improve our productivity, is just going to be detrimental in the long run.
Interesting, and it speaks to Madam Wanga's analogy of the twin deficits. And as we wrap it up, ladies and gentlemen, I just want to also urge you to talk to our investors. 2020 was a year where we did see a spike in the number of Kenyans who registered their own businesses. Looking at the data from the Registrar of Companies, we are looking at a 58% rise in companies that were registered between April and November, which hit about 65,000 new companies registered. And speaking as analysts, what are some of the lessons you'd like to share? And what are some of the expectations you have when it comes to Kenyans being entrepreneurial and investing in the right stocks, investing in the right economic activities that can see them make some good income at the end of the day?
I think it's important for you invest to carry out necessary research. So make sure that the venture that you're investing in, you understand it. So unfortunately, most of us Kenyans sometimes just copy what our neighbor is doing. Like we've seen a lot of that. Like someone opens a petrol station next to you, then you find another one very close to it. And so it's about knowing the market and making sure that you have the right venture. And in terms of the stock market, learn more about the companies, learn more about the investing universe, and talk to your brokers and have an idea of what is happening generally, and then you can have a better view of how to invest in a particular stock here.
Excellent. And of course, the Trading Bell is the home where we inform our viewers. And
yes.
Mr. GICHUHI, your closing thoughts on the same?
I think we have, to me, that's a good side of COVID. It might have, disrupted. It disrupted, and it opened our eyes, and businesses were registered. Why? Because a lot of us got out of our comfort zones, which I feel is a good thing because it will drive the next wave of entrepreneurship in the country. Because now people have sort of come alive to the fact that employment is not forever. There's something you've been putting away for a very long time, and then the shock came and you had to do it immediately. I agree with Wanga. You need to do your research, know the market, understand. Because a lot of us Kenyans, we go and do things and then you learn the hard way. But if you haven't done that, learn from your mistakes. The other problem I've seen with Kenyans in investment is they give up too soon.
They want to kuomoka.
Get in next month, you're you've broken even and you're making profit. It doesn't work like that. Investment, wherever it is, and that's why we are very gullible to all these pyramid schemes and stuff. Because we want to be told we are making 50%, 20%. But any honest business is not going to be like that. There's the 1-2 businesses that do it, and we read about them, the Googles but honestly, business or entrepreneurship is a long journey. The 1,000 steps, you have to take them step by step, be patient, learn from your mistakes, and learn about what you're investing in. As you said, Trading Bell is one of the places where you can come and just listen and, new terms and what happens in markets. Understand what you're investing in. Yeah.
You have the final say.
Thank you. For me, it'll be take a balanced approach. As we are told, take a balanced diet, take a balanced investment. Risky investment, more secure investment. The market offers you, as an investor, more secure, more liquid assets, so you can balance your portfolio such that if the business you've put in your money in, a percentage, if it goes bad, at least you have something that will pay your bills and take care of your daily expenditure.
Wow. Quite some interesting sentiments coming out of our analysts, just dissecting what to expect in 2021. Well, just before we wrap up the show, let's take a look at how the money markets have been performing. Quite an insightful session we've had with our analysts, just giving us the lowdown on what to expect in 2021, and we do appreciate your insights. And remember, you can engage with us on our social media handles appearing at the bottom end of the screen, and you can also keep us posted by sharing with us your thoughts, your questions, and we'll be able to tackle them in our next edition. From me and the entire team, it is bye-bye for now. Take care, keep safe.